Morning, Steve Free in Chicago with the morning grain comments. Well, it's sunny here today, but the weather is expected to change across the U.S. Midwest over the next few days. Heavy rains are forecasted, especially for the Delta and southern U.S. Midwest. The extended outlook calls for cooler temperatures the second week, with maybe our first snow across the northern part of the U.S. Then maybe temperatures turn back closer to normal. So we're going to have to watch this change in weather pattern and see if it has any impact on logistics. For the most part, prices are a little bit lower overnight for beans and wheat, a little bit higher in the corn. The big news over the weekend obviously was the Paris terrorist attack and the impact it's going to have on global markets. Initially, stocks opened up lower, but now have turned higher. The dollar's higher, crude oil's higher, and most of the metals are higher, while the grains are lower. Last week, the fact the USDA raised the U.S. soybean crop and carryout, the fact that one private group raised next year's U.S. Soybean acreage estimate, offered resistance to the market. We're at pretty important support levels. Some people think that we'll kind of hold at these levels because of the nearby demand. Others think that unless there's a weather problem in South America, we could push lower below this key area of support. This week's soybean export inspections are expected around 70, maybe 80 million bushels. Last week's sales were 48, so we're losing ground on shipments versus commitment. We do get the October NOPR crush today. The average guess is around 163 million bushels versus about 158 last year. Same story in the corn. USDA unexpectedly raised the U.S. corn crop, raised the carryout, and raised global stocks mostly because of China. That offers a resistance above the market. Firmer cash basis domestically offers support to the market, especially to the spreads. I think most people are looking for export inspections to be around 31 million bushels, and sales last week were 24. So here again on the export side, we're losing ground versus USDA's export guess. Wheat market lower, just okay weather. Not a lot of new export demand. U.S. prices are becoming more competitive. We should be near support historically going into next year's uncertainty weather-wise, but the funds keep adding to their wheat short positions. The CFTC report on commitments to traders was delayed from Friday until today. A lot of people are looking to see if what the fund positions are, whether they're short beans, corn, and wheat, and by how much. And so that might offer some trading opportunities tomorrow. So again, change pattern in the U.S. weather. South American weather looks good. Globally, demand might be slowing. A lot of uncertainty with the increased terrorist activity, and we'll just see how the markets handle that. As always, these are my thoughts and not those of ADM or ADM Investor Services, and have a safe and profitable trading day.